Hi, good afternoon, everyone. Just ticked over 12 o'clock, so we'll get this started in another minute or so. We'll just let everyone else have a chance to log in, and yeah, we'll get started very soon. Morning, Mark. Morning, Michael. Morning, Ingrid. How are you? All right, looks like most people are online, so we'll get into it. Thanks everyone for jumping online again. Nice to see a lot of familiar faces that are coming along to all of these sessions. So thank you for that. As always, I'm joined by full service options advisor Jimmy Vith. Hi, Jimmy.
G'day guys. Hey Blake, how are you? How you going? All good?
Yeah, I'm good, thanks. Today's all about you, Jimmy.
Oh wow. Okay, cool. Damn.
I
Where do I start? I was born in May. Nah, I had to go.
I'm not sure how many people are interested around that type of backstory, Jimmy, but more
Ah,
so
okay,
the trading.
cool. Okay. Okay. Oh, I thought it was about me. So there you go. So anyway, yeah, cool. So,
No, very good. I thought we'd change things up a little bit today. Obviously, anyone that's tuned into the previous sessions has seen us go through a lot of the top optionable stocks on the market,
yep,
having a look at the charts, and then some potential trading strategies to implement
yep,
if they were setting up correctly. A lot of the feedback that I had speaking with a lot of you was around, some more detail around, how Jimmy identifies his trades, what he looks at, whether that's within the stock itself or externally, and how he manages a trade too. So hopefully you all can gain a few bits of knowledge, a few tips and tricks from this session today to implement into your own portfolios or your own trading strategy. And that's what it's all about. So, if anyone has any questions to Jimmy, today is the day to ask them. And we can have a discussion there. So use the chat box. If you're on your phone, there should be a tab down on the bottom dashboard. Otherwise, if you're on a computer to the right hand side, you should be able to bring up the chat there. Okay, great. We'll get there. As always, I'll get the disclaimer out of the way. Obviously, this is general advice, this presentation, so it doesn't consider your personal circumstances. You need to decide if any information is appropriate for you. Of course, past returns are no indication of future returns. And please make sure if you're new to options, they can be complex instruments and it's not suitable for everyone. So please, if you're new, make sure you understand what options are. Have a look at some trading strategies. Paper trade, great way to get involved and learn how the market works and how it affects your options. Use the simulated accounts that we provide. It has a whole bunch of great information around maximum risk and understanding how the options can move as the underlying market moves as well. Okay, all that good stuff's out of the way. Let's get into it, Jimmy. I guess, maybe we do a quick recap of what's happened in the market over the last week.
yep.
US CPI came out a couple of days ago, higher than consensus,
Correct.
and bond yields up a little bit. Does that mean that the overall sentiment has changed, or is the emotion getting a hold of everyone?
Yeah, I think you've hit the nail on the head, Blake, at the moment as well. Yes. The first thing, guys, as well. So whenever you sort of start as well, myself personally, obviously we'll start here as well. But obviously, the first thing that I look at is the bond market straight away. There is a saying in Wall Street and trading as well, in general, the bond market is always right. Okay, so that's probably one thing to always keep an eye on. Okay, so for me right now, so as Blake said as well, the inflation print was higher than expected, and you saw what happened to the bond market. The bond market took off as well, so it went higher as well. So the implications on that is, look, it looks like the Fed will cut. Okay with that. They're talking three rate cuts, but it looks like they might go to two now. And the thing is, if inflation keeps printing higher, the worst thing is, they might just sit on hold as well. So the market has been expecting rate cuts, this year as well. So that's where you're at as well at this stage. So I think right now, guys, and this is probably, we'll see what the XO says to us right now, but the market is obviously at this point is crossroad right now, where you got to be very on the actual careful side as well right now as well on the market.
Yeah, absolutely. There was a lot of optimism from traders expecting rates to be cut from all across the globe. And I guess, when you see inflation higher, which is a big indication around, how these central banks do go about cutting rates, we saw some volatility. I mean, the US market sold off quite hard, and we'll have a look at that in a minute after the inflation announcement. And the Aussie market's been pretty volatile this week off the back of that too. So, good to know that you kind of, look at that. And does that kind of give you your overall sentiment of the market and affect your bullish or bearish trades, Jimmy?
Well, it does, correct as well. So, well, the main look, obviously, a lot of people look at the economy and everything as well. For me, at the moment, the CPI number is the most important number for me. Obviously, just based on economic sort of front as well. The US obviously right now they use the Fed uses this PCE, which comes out as well. It came out last week as well. It's obviously based on consumption, okay, and what that tells you, obviously, what's happening in inflation. So for me right now, inflation is the number one key right now. As we sit right now, inflation is your key indicator to look at as well. But as I kept saying, the bond market is flagging. Be very, very careful right now as well. So that's where it's at. So, based on, I know we're going to cover the XGO and the Fed and everything as well, and obviously as well. But obviously, just keep an eye on the two things that you need to keep an eye on, obviously, externally right now is what a central bank's saying, and obviously what the bond market is doing. That's your two main things as well to watch as well. So for me right now as well, the bond market at the moment is flagging. Be careful as well at this stage as well. Risk is increasing in the market, okay? And when risk increases in the market, as you can see, volatility comes in, and away we go. Now, doesn't mean you can't trade right now, but just be careful as well what you're doing as well right now as well. So depending on which sectors you're choosing, but be on the very careful side as well.
Yeah, for sure. And when you say bond market, there's a whole bunch of different bonds in the market, Jimmy.
Yeah.
Do you look at the US market and the Aussie market, and
So the two ones that I look at is obviously the Aussie market, 1 year and 10-year bond markets. Okay, you can look at the three if you want, but 1 and 10 gives you a clear indication where things are going, and obviously the US the same, 1 and 10. So that's where it's at now. Last night, what happened last night? I don't know if you guys, anyway, caught the market as well yesterday. So what ended up happening was the another inflation sort of print came out. It was a little bit higher again, okay? But the market then also automatically focused on the ECB, the central banks, okay? ECB and, the Fed are pretty much, aligned, like the Australian market as well. So obviously, once one starts cutting, all the rest start cutting. Once they start raising, they all start raising. Usual sort of story. So pretty much, obviously, what Lagarde came out and said as well. Obviously, they kept rates on hold, but what she said is there's definitely a cut coming as well. And as soon as that happened, the market had a miraculous turnaround, and off it went back up as well. So this is what I'm saying to you guys on the external front as well. Always watch what central banks. If there's a meeting with the central banks, especially obviously, the Fed, ECB obviously at the moment is a bit different as well, but obviously, the Aussie market, obviously, our RBA and the Fed, they're the two ones that you should always be on your calendars as well to keep marking on as well. See when it's out, and away we go from there. So we go. Yep.
Sure.
Now, is this the bond market? Is it, Blake?
Yeah, this is the 1 year US bond market.
Okay, cool. So the 1 year US right now obviously is running at around 5.1 at the moment.
Yep.
Yeah. So just to follow up as well, guys, and this is what you've got to be looking at as well. Obviously, the cash rate. So what you've got to do automatically, I think we spoke about it last week, but I'll cover it again. The cash rate at the moment on the bond market or the Fed rates at the moment is around 5.5%. Okay, with that. The bond market right now is at 5.15. Is that what it is? Hang on one second. I can see it properly here. Yeah, so nearly 5.2. Yeah.
Yep.
So to me, guys, as well, what is that indicating? How many rate cuts are they looking right now as we speak? Usually they do rate cuts on 25 basis points. So let's see if we get anyone waking up today. Well, it's still everyone's on Easter break, I think, as well at this stage. So
I think so too. I last week I believe you mentioned that you would take away the current 1 year yield away from the current cash rate,
yep,
and then divide by 25.
yep, yep. Okay, so Harry's come up with 2 and 3 cuts as well. So usually one cut, Harry, is 25 basis points. So if the cash rate in the Fed is running at 5.5, yeah, okay with that. All indications last week was running at close to 5. So that was looking like they were looking at 2 cuts. Yeah, okay with that. As we see it right now, it looks like it only might be one and a bit, unless the bond market starts coming back down. Does that make sense, guys? And this is why I say to you right now, we're at a sort of interesting spot right now in the market. The market's always wanted 2 and 3 cuts coming in for the year. Does that make sense? Yes? No?
It makes sense to me, Jimmy.
No, I know it makes sense to us as well, but obviously I just want to sort of get it clear as well. Yeah, cool. Yeah, well done, Harry. Yep, awesome. Yep,
Yeah.
okay with that. So 1 cut at the moment, 2 will be the best case scenario, okay, if the bond market sort of reflects it. But at the moment as well, as you can see, and this way you're sort of starting to see a bit of volatility in the market as well. So, obviously our trading is based on volatility, as you guys know, and the VIX and all that as well. The XVI has taken off. And it's actually increased as well. So, yep. Now, if you bring up the Australian one, if you've got that, Blake.
I do. I've got the 1 year here.
Yep. Okay with that. So the 1 year, as you can see right now, our cash rate. Does anyone know where our cash rate is at the moment?
I'm sure you've got that on a post-it note on your desk, Jimmy.
Yeah, no, I know that as well. Yeah, well done. Well done, Ingrid. Ingrid's correct as well. So 4.35. Yep, okay with that. So right now, yeah, too high, John. Yeah. Interesting you say that as well. But anyway, there you go. Yeah, we'll cover that later as well. But anyway, yes, that's 4.35 as well. The 1 year bond is at 4.16 at the moment as we speak. Okay with that. So that is indicating how many times will the RBA cut this year?
That has to be 1, Jimmy, at 25 basis points.
Correct. That's right as well. So the market is pricing 1. Last couple of weeks, 3 weeks ago, was under close to 4%. So that was indicating they might cut twice. Does that make sense? Now, where it gets a little bit confusing, okay, so if you go back to the Fed, okay, with that, and obviously, so let's just stay here with the Australian one as well to make it easy as well. What you do, so you look at the 1 year bond, okay, so they're looking at obviously 1 interest rate cut, okay, with that. But then what you do, you go look at the 10-year bond for Australia. Have you got that one up, Blake?
I do. Here you go.
Getting it to work today, mate. What's going on? So there you go. No, all good as well. And as you can see, the 10-year right now is running at 4.32. So what does that mean in the overall picture, guys?
Means the market's not factoring in any rate cuts over the long term.
Correct. Yeah, correct. Long term as well, they're pricing in the market's just going to stay flat. So the cash rate will stay here at 4.35. Yeah. Does that make sense, guys? Now, what you don't want to see is the 10-year bond start increasing higher than 4.35. Because what does that indicate, guys, long term? Rates are going which way? So the market is saying it hikes. Well done. Well done, Ingrid, as well. So that means they're rising as well. So if that means higher as well, the market has been pricing lower. Yeah. So what do you think if interest rates are going up or the bond market's going up, what do you think is going to happen to the stock market?
They're generally inversely correlated, Jimmy,
Correct.
right?
Well, then Ingrid, down. Correct as well. So there is a correlation, as Blake's pointed out as well. Bond market going up, usually, obviously, safety leaves the bond market and it comes in to the share market and inverse as well. Everyone understand that? Okay with that? And this is why I say to you guys as well, the bond market is critical as well. Because as you guys know, the bond market is, I don't know if you guys know this as well, but the bond market is probably 10 times bigger than the share market, okay, in the context of things as well. So, everything derives value from the bond market. Everyone okay with that? And that's why I say to you guys, it's very critical to understand how bonds work. Got
Yep,
that?
great.
Yep. Yep. Awesome as well.
That's very good, Jimmy. And I guess, is I think I might have asked this question a bit earlier, but getting an overall market sentiment, does that affect the way that you put trades on and
Yes.
affect, if you're generally bullish or bearish and
Correct. Yep.
your
Correct.
deltas in your portfolio?
Yep, correct as well. So for me right now, as well, as I keep pointing out as well, the cash rate at the moment, obviously, the bond market is signaling to me, be careful here. Okay with that. Because as I said as well, if the bond market starts ticking up higher, okay with that, to me that shows me that I need to sort of take protection or maybe flip my trades over. You understand? So that's why it's sort of critical to me to understand where this is all going. Last week and 2 weeks ago, the bond market was close to 4%, and the 10-year was under 4 as well. So that was telling me I'm bullish here because it's gone up to 4.35, especially in Australia. We got to be careful as well. So if this is where it's really critical right now, if you got positions or you got stock, what should you be doing, guys? Anyone know? If you got stock, guys, here you might want to start looking at obviously taking your protection trades. Okay with that? Protect your portfolio. Yeah, okay with that. This is why we learn options, guys. Yeah, okay with that. When I first came into options, the first thing that attracted me was the protection side as well. So I can protect. It's like an insurance, as they call it. Okay with that. So that's why reducing exposure, no problem, Harry, as well. That's another good thing as well. It doesn't mean that if you got a good profit here, and you're sort of getting nervous on what's going on as well, you can always take profits as well. So that's another sort of thing as well. So it's nothing wrong, because the number one rule in trading is take profits. Okay with that. So yeah, by all means, if you want to reduce exposure by selling or buying protection, whatever as well. So that's where it's at as well. So that's very critical right here as well. Now, as you can see with the XJ guys as well, I think we've got a confirmation of what, guys, right now. So obviously I'm going now into a technical sort of side. Okay with that? Anyone know what I'm looking at? I have covered it before. Yep. I think, yep, I have got a lower peak. Well done, Ingrid. Okay, so I've got a lower peak right now as well. So for me right now, I'm definitely, this is why I said I'm on alert right now. Well done, Belinda. Yep, lower high as well. But I need one more thing to confirm a trend reversal. What do I need, guys? Lower low, yep, or lower trough. Everyone understand that? Yeah, well done, Belinda, as well. So where is that trough base? Where's that support level?
This previous low here about 7775.
That's the one as well, yeah. So 77.50. We tested as well, even yesterday, and even last night we tested 77.50. We haven't broken yet. Okay with that? So still the structure's up there. It's still bullish, but for me right now, where the bond market is sitting, okay, and where everything's sort of going, okay with that, I am definitely on high alert. Everyone okay with that? So that sort of coincides where I sort of think as well as a trader. Okay with that. So I first look at the bond market. Okay with that. Next thing I look at is obviously what are the technicals telling me? Because technicals never lie, guys, as well. The market knows as well, right? So for me right now, the market doesn't know which way to go. So if it breaks 77.50, then I've got my first lower trough as well. Okay with that. So we could be potentially on a trend reversal. Does that make sense, guys?
Yeah, and I guess we kind of see the same thing with the bond market as well, Jimmy. It was pretty volatile last week
Correct.
after,
Yep.
the inflation rate came out and then the news came out following it too. And
Yep.
you can definitely see that volatility reflective in the stock market too. So it seems like sentiment is mixed. People are uncertain whether to, buy or sell and don't really have a clear indication around where it could all be going.
Correct as well. So as you're saying right now, the look, obviously what you got, look, you can base on, as I kept saying, inflation is very critical right now. Okay with that. As you guys know as well, pretty much what's been happening as well. The other factor that I look at as well, pretty much obviously, is the US dollar. That gives me a range on what's happening. Obviously, is the market sort of nervous or not as well? The US dollar has been rising as well, slowly, slowly. Okay with that. Usually, US dollar is a safety trade. Okay, with that, everyone goes into the US dollar. Okay, because understand, guys, as well. And this is where I get asked this question a lot. Okay, where does money go? Money moves around, guys, as well. It either goes to the bond market, it goes to the share market, it goes to obviously, US dollar, it goes to gold, it goes to silver. Does that make sense, guys? It moves around to different assets. Yeah. Okay, so that's what actually happens. Well, it doesn't just disappear. Yeah, okay with that. So it has to go somewhere as well. Usually, if it goes to the US dollar, it's usually it's a safety trade. Does that make sense? Yeah. I won't go into it too much as well today because I'll probably confuse a lot of people as well. But obviously, what you'll find, obviously, when the US dollar starts rising and the bond market starts rising, okay with that, those two factors as well. What usually happens is the share market pulls back. Everyone okay with that? Yep. Losing people. Yeah, Blake.
No, people are still here, I'm sure.
Yeah,
No, no, that's good, Jimmy. And I think, when you are trading, you should have an overall thesis, right? And
yep,
if you can get a longer or medium to longer term view of which way you think the market's going to go, looking at some
yep,
macro factors,
yep.
you can place your trades appropriately.
Correct as well. Yeah, correct as well. So look, for me right now, as I kept saying, XJ is your number one. So pretty much, obviously, you go through it as well. So you look at bond market. Obviously, next thing you look at is the technicals on the XJO. Okay, that sort of gives you the overall picture of where this market wants to go. If it breaks to 77.50, I think it probably hits the next trough level. Okay, yeah, just around there. Yep. And then if it breaks that, it's on. Personally, it goes lower from here. So that's where it's at. So, obviously there is a setup for a trade here, but, it just comes down to what they do next with the bond market as well. Because if the bond market keeps rising, there's no way this market stays up as well. And I think the exchange has been doing pretty well, considering, obviously, we've gone from, 2 cuts to 1 cut. Okay. If that comes into 0 cuts, okay, I think the market is going to probably, be angry with that and obviously start selling off as well. So that's where it's at.
Yeah,
Now,
sure.
yeah. So as Blake sort of pointed out, long-term, guys, as well, the picture does change. Yep, okay with that. The biggest factor this year is what, guys? Does anyone know? That can move this market anywhere. Someone brought it up last week, but I didn't cover it as well. Let's see if anyone's picked up on it. Anyone know what the biggest thing this year would be to affect markets? Well done, Ingrid. US elections. Yep, cover that. That is the biggest factor as well. What does the market want? Who do they want to win? Anyone know? This is where it gets interesting. Yep, Ingrid saying Biden. Yep, go that. Anyone else want to have a shot? Trump, yeah, Trump. Yeah, okay with that. Correct as well. So they all want Trump to win. Reason being is he was stock market positive. Yeah, he's a corporate guy. So what is he sort of flagged already? What is he going to do? He's going to cut the corporate rate, correct? That's one of his things that is coming out already. Yeah. When he was in office, what did he want to do? He wanted the Fed to do what? Go negative rates. Yep. Weaker dollar. He understands the game. Yep. If that happens, guys, where do you think the share market's going? Remember how he was on Twitter? Rah, 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 30,000, 40,000. Yeah. And away we go. Yep. Is bullish for the market as well. Correct. Well done, Steve. Yep, cover that. So that's bullish, right? Okay. If Biden comes out, yeah, what happens? Nothing might happen, but the market at the moment, as it sits right now, they want Trump in. Yeah, okay with that. So if Biden comes in, you might get that correction that we've all been waiting and hoping for as well. Okay with that. That's my personal opinion, guys. You can have your own opinion, but I think this year might be, one of those big events as well, and away we go. Yep, okay with that. So that's your long term, but that's out in November, guys, as well. So short term right now, we just got to look at, and as I keep saying, guys, as well, technicals in this market never lie. Okay with that, and the technicals right now for me are telling me just be on the careful side.
I think this is the first time, Jimmy, that the sentiment has probably changed a little bit from the central banks. Like we spoke around November last year where, inflation was coming off and then the banks were saying, look, we're going to look at cutting rates, and we've seen this big bull run so far.
Yep.
So there's no doubt that external factors are moving the market. And I think I said this the other week, but, the day before the central banks announced, generally the market's pretty quiet, waiting for the results to come out, and then we see some volatility following that too. So definitely important to keep aware of these macro factors, and for sure, any big external news is playing a part on where the stock market is going.
Yeah, correct. And as Blake sort of pointed out, and obviously for you guys as well, long term as well. So what you should be doing, guys, is you should have, going onto websites, okay, and make sure you're looking at calendars as well. Just obviously keep an eye on what's, upcoming, okay, with that. As I kept saying as well, the two big things as well, obviously keep an eye on CPI, obviously, which is the inflation print, okay, out of Australia and US, okay. And the other big things is when a central bank's talking, the RBA, Fed, when's the announcements? Okay. Usually the market can move usually when Powell speaks as well. Okay with that. So another thing to sort of point out as well, but I find obviously it always, reflects, and as Blake pointed out, volatility moves, okay, or sort of positions themselves just beforehand or afterwards as well. Okay with that. And away we go. So they're your two things as well. So each week, what I do, guys, as well, I make sure, or, I look 1 or 2 weeks in advance, okay, when are the inflation numbers coming out, or when's the central banks talking, okay with that. So keep an eye on that as well, all the time as well.
Great. I think we might move on, Jimmy, to have a look at some individual stocks.
Yeah.
Unless there was anything else that you kind of look at from a wider macro level.
Nah, just the macro level. So what I look, obviously, say, let's reflect as well. So obviously you've got, obviously, as I said, bonds, obviously US dollar, and obviously the XJO, central banks, what are they doing? And then I'll just look at the XJO. Okay, so the overall sentiment right now for me is still bullish, but it's sort of getting on that sort of, cusp of actually turning around. Okay with that, and away we go. So they're the things as well. And as I kept saying, keep an eye on calendars as well. When are the Fed talking? When's the RBA talking? And away we go from there. So that's probably your important things as well. So you can sort of sense as well. And usually what you find, another sort of little factor as well, when volatility increases as well, that usually can reflect the change of trend as well sometimes. Okay with that. So obviously that's another sort of thing as well to keep an eye on. But for me right now, they're the key factors as well at this stage.
Yeah, and I guess something else that I was looking at yesterday, Jimmy, and I had a few conversations with people, was the skew in the market. The puts, the premium on the puts were a lot higher than the fair value versus the calls yesterday.
Yep.
And I haven't really looked at the options chain today, but that's a great indication around the sentiment, right? If puts are more expensive, that means there's more demand for puts. Whereas, if the calls are cheaper than their fair value, not as many people are buying calls too. So maybe that could be a, shorter term indication around the general market sentiment. Do you look at that at all?
I do look at that as well, but the thing is, what I do find sometimes there is a bit of a skew, okay? And what catches a lot of people out sometimes as well, On the XJO, yes, have a look at it, okay, and that's a great sort of indicator to look at, okay, with that. Just be careful that, obviously, what the stock is doing. So is it going ex-div? Because you'll find in May, the banks obviously have got a higher put premium right now because obviously they go ex-div, yeah, okay with that. So that's why it's a little bit on the higher side, okay with that. The numbers are a bit higher, so it can be skewed, okay. So just obviously, as I think I pointed out earlier, if you're looking at individual stocks, know when it's reporting, okay, and know when obviously it's paying its dividends as well, okay, with that. But obviously, yes, correct as well. You can look at the XJO, and obviously have a look at obviously if there's any sort of skews as well in the market, correct as well. But usually that's reflected on the volatility index. So this is why the website usually comes up straight away, and it gives you obviously I've seen it on the website as well. If you look at obviously XJO volatility, have a look at the short term, long term, and away we go. So the IV rank, but obviously if you look at, what's happened in the last month on the VIX as well, XVI has been rising, and obviously that comes up as well. You know what I mean? So the last month it's sort of ticked up as well. So I was running at around 10%. I think it's ticked up to around 12. Do you know what I mean?
Yep.
I know it doesn't seem a lot, guys, but usually 10 to 12 is a 20% move. You know what I mean? On a risk as well. Do you know what I mean? So that's why it sort of increases as well. So, and this I'll say the website for me is fabulous as well, guys. So that's where it's at.
Yeah. No, very good. I wanted to go into some more detail around keeping it simple, Jimmy,
Yep.
the KISS acronym.
Yep.
And sticking to stocks that like not over trading,
Yep.
understanding these particular stocks and, not forcing trades that you that you
Yep.
think in the spur of the moment and kind of sticking to a
Yep.
plan or a strategy.
Yep.
And I know you've talked about this in our previous sessions as well, but you mainly trade, only a handful of stocks that you know inside and out, and you know the support
Yep.
and resistance levels.
Correct. Yep.
Why do you only stick to a handful of stocks and not trade every opportunity that comes in?
All right. So the thing is, okay. So pretty much, obviously, all right. So how do we start as well? So pretty much, obviously, looking at charts, guys, I find it can be easy to read. Correct. I don't know about you guys. Well, look, I try and keep it simple as I can. Right. Okay. I look at my peaks and troughs. Okay, and I look at support and resistance. Okay, with that. Do I use indicators? Sometimes I do. Sometimes I don't. Right. But obviously, I try and keep it as simple as I can. Okay with that. But what I find, guys, is why I know the relationship, obviously, of my stocks is I know how to sort of trade. But what I find, guys, and this is probably as a trader as well, as you guys know, we are human beings. And the two factors that run for us are what, guys? What are the two factors that make decisions for us? Fear and greed. Okay with that. So they're the two sort of things as well that obviously, can affect us. Now, what you find, guys, as well is, and this is probably a trading sort of rule as well, when you get out of something and you make a profit, yeah, what's the automatic thing you do sometimes? Automatically, you want to go into another stock, correct? Yes, no,
I
yeah.
think that's
I think we've all,
overconfidence, Jimmy. I think, and
yeah,
we've all
correct.
been there.
Yeah. Correct. And then what you do, you break rules. You don't look at your support resistance. So just try and keep it as simple as you can. Sometimes, guys, being out of the market is okay as well because it presents opportunities. Is there always going to be an opportunity in the market? Always. Okay with that. So just obviously that's probably one thing as well. So we obviously run by fear and greed, as you guys can probably gather. Okay with that. Sometimes, look, the worst thing is sometimes, and this is what I get a lot as well, you cut your profits too early. Yeah, okay with that. Is that a wrong thing? No. Okay with that. Reason being is profit is profit. Okay. At the end of the day, it's in my bank account. It's not in someone else's. Okay with that. So this is what I'm trying to say to you guys, right? Sometimes psychology, I think psychology is around 80% of trading. And 20% is obviously your technicals as well, but 80% we are driven as well, guys. And this is where sometimes it's good to just look at as well. And this is why I just trade a handful of stocks that I like. Okay with that. Another factor is, I don't know, look, it depends on how you look at it as well, but obviously it can come down to, I look at banks, okay, with that, but I have a preference to choose, ANZ and Westpac or CBA, yeah. But I hate NAB, yeah, okay with that. Why do I hate NAB, guys? Does anyone know? Simple. Anyone know? Why I hate NAB is because I've lost money on it. That's why. Yeah, simple. That's it. Yeah. So that's me. Yeah. But other people have made money. Yeah. But one of my first trades I did was on NAB, and it was actually at the time when they had the UK sort of stuff, the first time as well, the home side sort of lending sort of stuff as well, where they lost money. And I had some puts, and I actually made money. I actually did pretty well. So that's us guys as well. You know what I mean? That's trading as well. You know what I mean? So I've got a bad sort of, I just hate trading NAB for some reason. That's me, right? But doesn't mean that you can't make money. It's what you sort of feel comfortable with as well. Yeah, okay with that.
Yeah, it's great advice, Jimmy. And like I speak with a lot of traders, and some of the best ones stick to one or two stocks, and
Yeah,
they know them inside and out. They know how they behave. They understand, the macro conditions and how it affects those stocks, and they have the same or very similar strategy, and
yeah,
they don't feel the need to put a trade on every day, and can be
correct.
patient and wait a
Yeah,
couple of days for the right opportunity to come in.
yeah, yeah.
So just because there are, 80 tradable stocks on the options market doesn't mean you need to participate in all of them.
Correct, correct as well. Now, if you're looking for a trade, obviously that usually tells me that you're going to lose money. Okay, with that, if you're trying to force a trade, so that's probably another thing. So pretty much, obviously, know your stocks as well. Know which one you think. I try to sort of diversify. So use one bank. XJ is one, obviously the index as well. So one oil stock, one commodity. So your BHP, Rio, Fortescue. You just sort of spread it out as well. I tried Where's Woolly sometimes. It just sort of depends on where stocks are at. But obviously, just try and diversify your range as well. And away we go. That's probably one thing as well to keep a look at as well, personally.
Yeah, great. And how about strategies, Jimmy? I know when we've had a look at stocks in the previous couple of weeks, we've looked at a lot of
Yep.
credit and debit spreads.
Yep.
Do you diversify your trading or your different selections around strategies, or is there one that you
100%.
like? Yeah.
Yeah, 100% I do as well. So obviously it comes down to, does anyone know what it comes down to? Which strategies are the best? There's number one rule in option trading. What is it, guys? Well done, Ingrid. Volatility. Okay, that influences what you're going to be trading. Yeah. Everyone understand that? And this is why we've got the website, and obviously the website reflects everything. Okay with that. And if you're confused, go look at which strategies work best. Okay with that. But that sort of determines what I'm sort of thinking as well. Low volatility means what, Blake? What should we be looking at? Low volatility.
It means premiums are cheap, so you should be
Correct.
looking at buying options.
Correct. Okay with that. And obviously when volatility is high, we look at what?
Selling those
Selling.
premiums.
Oh, exactly right. So everyone get that as well. Just keep it simple, guys. As well. Don't try and overcomplicate it. There's no sort of perfect strategy in the market. Okay with that. And away we go. Now, obviously, when things are sort of obviously cheap, volatility, you buy. Okay with that, and vice versa as well. Like right now, volatility is increasing. So right here, we should be looking at what, guys?
On the XJO, it's like probably a good time to look at selling premium.
Well
As you
done.
said,
Yeah.
it's only gone from 10 to 12%, but
Yep.
that's a 20% increase. So it is
Correct.
actually a big move.
It is a big move. So you should be selling right now as well. So you should be doing bear calls. I don't know about bull puts, because for me right now, if this trend breaks, it's going to go quickly. Okay with that. But selling calls, it might be a good time to be looking at it as well. Above sort of obviously your top level as well. So correct. Yeah.
Yeah. And it is an interesting phenomenon, Ginny. And I guess, kind of why we look at volatility and how the stocks actually do move. Generally, volatility is mean reverting, right? So each
Yep.
underlying asset has a standard volatility that it will trade at
Yep.
over a long period of time. So looking at the IV rank is super important because you can kind of get a scale of where it is now versus where it tends to trade.
Correct.
But, XJO over the long term is about 10.5% volatility, and it always seems to go back through that level. So when we see times where, implied volatility is up at 12, 13%, the market's expecting a bigger move over the next period of time, and that's why the volatility is higher. But generally, we don't see that, and volatility would tend to contract back to those historic levels as well. So it's an opportunity just to take advantage of some mispricing in the market, I guess. But
Correct.
equally, and looking at the macro factors, there's generally a good reason why the implied volatility is higher too. And I think that's because of the uncertainty in the bond market right now.
Correct. Yep. Correct. You hit it in one as well, Blake, as well, 100%. So obviously, the number one game, obviously, if you're trading options, okay, you should always know volatility on stocks as well. What you find with volatility also is, where it increases sometimes is in this way, sort of comes back to, what the stock's doing. Okay with that. If it's reporting, guys, usually volatility does increase. Okay with that. So, if it's coming into a trading, if they're going to report their numbers, okay, their full year numbers or half year numbers as well, volatility does increase. You sort of find that as well. Volatility will come up as well. Like I know Fortescue does it as well. It goes from, a 35%, it can skew up to around 50, 55, 60%, on vols, right? So, that's why they're expecting a movement in the stock. Okay with that, and away we go. So that's probably another sort of little tidbit to take into account.
Yeah, I think we looked at that pretty heavily during earnings season as well, Jimmy, on our previous webcast. So
yeah, correct as well. Yep.
For anyone interested, jump back and have a look at that session too, and you can clearly see that the volatility charts were increasing a couple of weeks prior to the earnings date.
Yep. And then this comes down to, obviously you talked about strategy as well, and this is even reporting as well. You've got to understand if volatility is low, you look at obviously, two sides to the story, buy a call, buy a put, or, do you come in and if volatility is high, do you sell? That's another question as well. But volatility is your number one game. And this is why, keep going to the website, guys, and keep looking at it as well. And I know you guys are all members. So, I'm preaching to you guys, but obviously, it's just a simple thing as well. Just keep looking at, your volatilities.
Yep. Great. Might be worth having a look at a stock that you trade quite frequently, Jimmy.
Yep.
I was thinking, is BHP one on your radar? Just because there's been a bit of action
BHP.
on
if you want to go into a minor, BHP, Fortescue, and obviously Rio. Okay. I trade BHP and Fortescue, probably out of the two.
This might be a good opportunity to do a bit of an update on the charting because it's been maybe a month since we looked at this last.
Yeah, BHP is also. Right now, guys, the trend on BHP is which way, guys? Okay, so let's just go through it as well, guys, right now as well. So obviously, let's just see how I sort of look at the trade as well. So pretty much, obviously, BHP, first thing you need to sort of understand is what does BHP do? Yep. Anyone know what they do, which sector they're in?
Iron ore, Jimmy.
Iron ore. Okay with that. So yeah, Ingrid's
and a bit of copper. Yeah.
Yeah, and copper as well. Okay, that's iron ore as well. So pretty much obviously before you sort of obviously go anywhere as well, so pretty much obviously just looking at the chart as well, we know it's in commodities, okay, and away we go. So pretty much we need to look at the iron ore chart, okay with that? And
that's
see what
this one?
Yep. Okay with that. So pretty much our iron ore chart has been bouncing off as well. Yeah, it's fallen as well, but it's sort of formed a bit of a base, okay with that, and looking like it's sort of coming back up, correct? And it's been reflecting in the share price as well. So if you go back to BHP, okay with that. So right now, guys, we had a downtrend, okay, from the top, it was $50 all the way down, okay. Peaks and troughs were lower, okay with that. And then all of a sudden we had what, guys? So the trough, we had the last trough. Then we had a higher trough, okay, and then we got to follow up through with a higher peak. Yep. So has the trend changed right now?
think there's a good argument to say that it probably has, Jimmy.
It has, yeah, carry that. So obviously commodities are sort of the flavor at the moment as well. That's what's been keeping the market up as well. Next thing you want to look at, guys, on the stock is where's support and resistance. And usually a good way to sort of pick that up is obviously from your previous peaks and troughs. That's a good way to actually pick up, an easy way to do support and resistance. So your peak is around that sort of level. I think it's 40. Is it 46, Blake? Yeah.
Yeah, 46. It had some trouble towards the end
Yep.
of last year breaking through.
Yep. So 46 is your key level right now. So if you want to draw a trend, yeah, horizontal line there. Yep. Okay. And you got a bit of support probably around the 43, 44 mark. What is it? Is that 44?
Yeah, 43.50-ish.
Yeah, 43.50. Yeah, okay with that. So pretty much, obviously, if it sort of reflects where the trough is, as you can sort of see. So you got some there as well. So and obviously, I'd be looking at the higher sort of higher trough as well. Yep, yeah, just there. Yep, correct as well. Yep.
Yep.
Yeah, that level there as well. So if the stock comes back to there, and then obviously they're potentially a trade, but it's all going to be based on pretty much obviously what iron ore is doing as well, as you can see. But iron ore looks like it's sort of formed a bit of a bottom, okay, and pushing up right now. So that's all I do as well. Now, the other thing I need to look at, obviously, if I'm looking at a trade, okay, when's it reporting? And usually reports in February, March, and August, September. So, we're in April now. Okay, there's no divs coming up because usually when they report their full year or half year numbers, they have a dividend. There is no div, so that's sort of, so I'm okay with that as well. So for me right now, if it sort of breaks that 46 level, potentially could go back up to around $48. Yeah, just there. Yeah, just there, wherever it is. That next peak, correct. Yeah.
Yeah, just under 48.
48, yeah. Okay with that. Now, if you look back in hindsight, guys, as well, what pattern did we get here? Can anyone see that? Long term, if you look at a long term picture. Yeah, just there. Just leave it like that, Blake. Yeah. Anyway, to me, it looks like a head and shoulders pattern. Yeah. Well done, Michael. Yeah, well done. Yeah. So we pretty much completed the head and shoulders pattern. It sort of went straight back to obviously where it started from, which is interesting. So anyway, that's where it's at. But obviously that's a bit of a side sort of thing as well. But obviously, yeah, for me right now, yeah, correct. So I'd be looking at obviously seeing what happens. Okay. Now, as I said earlier on as well, would I be looking at a long position right now, guys? Yes or no? Go with that? No. Yeah, go with that. Reason being is obviously the bond market at the moment is on the high level. Okay with that. And the XJ is looking like it might want to break. Yeah, go with that. Yeah. But if it breaks 46, you've got a case all the way up to around, the 47, $48. So sometimes this is what I say as well. Sometimes you can just sit on your, on the sidelines and just wait as well for confirmation. Yeah. Awesome.
Yeah, makes sense.
Yeah. Go with that.
And I guess, Jimmy, once we do get around dividend date for these stocks that you are trading,
yeah,
how does that affect your trading? Will you not have an option that covers the dividend date itself, or how do you think about that?
So what I do, guys, is also pretty much obviously everyone knows dividends and franking credits, how they work as well. Yep, cover that. So what I look at, obviously, every year, what I do personally myself is I've got a calendar. I carry that, and I mark in the stocks that I trade, their obviously dividends, and when they're reporting. Okay with that. So obviously some of them don't give you the dividend on the day, the exact date. Okay with that. But what you find is when it's reporting, usually the dividend's going to follow somewhere there. Okay with that. So that's probably my number one thing as well. Then what I do, guys, as well, I always look at obviously how franking credits work as well. To receive the franking credits, you need to be holding the stock 45 days beforehand. Yep, go with that. So the thing is, what I say to people is, start looking at it, closer to 2 months before that as well. Just a quick sort of reflection. So if you've got, 30 days in a month, you know what I mean? 60 days, you start sort of looking at the stock right now. So pretty much if we're looking at this one as well, it's going to go ex-div around, late August, September, okay with that. So I'd be looking at it pretty heavily around July to looking at it as well. Now, it doesn't mean you can't trade it before that, right? But obviously with a dividend as well. Now, the one thing that I look at as well, obviously I look at their previous div, okay with that, and is there any chance they can cut the div or are they going to keep the div, okay? So I look at the percentage return on the stock, yeah? That's what I base it on as well, okay with that? So if they're paying, like I know Fortescue paid close to around, does it have to be 45 before? Look, Belinda, to receive the dividend, to receive the franking credits, you need to be holding it for 45 days. That's the rule. Yeah. So 45 days from purchase price. So that's if you bought it, day 47 before 47 days, yep, and it settles 45 days to receive the franking credit on the day pays the next div. Okay with that. You've got to be holding it 45 days. Does that make sense? Yep. So obviously then yep.
I was just going to ask, do you see a bit of buying pressure around that mark,
Correct.
Jimmy?
Yeah, correct. You find, obviously, if you go back in time as well, let's just obviously look back in hindsight as well. When did BHP start running back up? So he paid a div in March. Yeah. So I think it was February. Yep. So go back, Blake. Just go back to that big run as well, where it sort of started its shoulder sort of run as well. So no, go the other way. The other way. Yep. This way here, there. So what around there? What period is that?
That's end of October.
Yep, okay with that. So we had October, November. So you look at around December. Yep, it started running hard. Correct? Because they had the dividend coming up in February. Yeah, when did it peak?
End of the year.
Yep, go with
December.
that. So so that's what I'm saying. So what you got, obviously, you get the div run as well. So that's what usually happens as well. Does that make sense, guys? So you're 45 days. Same thing if you come up with a bank, okay? Same sort of thing as well. So right now, guys, the market is looking at the banks right now, okay? And as you can see, on today's day, the banks aren't moving at all. Yeah, because people are still buying it for the dividend. The banks are paying, except for CBA, ANZ, Macquarie, NAB, and Westpac are going to be paying a dividend in May as well. So you've got your 45, 50 days beforehand. Yeah. Now, the thing is right now, I don't want to sort of go too much into it as well, but the dividend returns on the banks are what? Does anyone know what the dividend returns are? Around about? So you've got to always look at what the dividend return is going to be. Yeah. Anyone know? Yep, around 5%. Well done, Ingrid. You okay with that? So if they're paying around 5%, is that an attractive dividend? Yep. Mark 5, 6. Yep. Yes or no, guys? And this is what the decision you have to make as well. Is 6% a good return? And that's, so usually with Fortescue and Rio and BHP paid over 10%. WDS paid over 10%. Do you understand? So, it comes down to a thing. Now, a quick guide to do this right now as well is, and this is how the market, this is how fund managers work as well, because obviously I understand how funds work as well, but obviously what they look at is obviously, if the dividend's only 4% or 3%, I would rather put my money in the bond market. Does that make sense? Rather than chase the div. So that. So
And risk your money in the market for
correct.
the market exposure. Yeah.
Correct. Yeah. Okay. So that's how they sort of work as well. So obviously and what fund managers do, they keep obviously buying this stock for a div, and then they go to the next one and the next one and the next one. Does that make sense, guys? So that's how it all works as well. So pretty simple as well. So, BHP, let's keep it back. Let's go back to BHP, but obviously BHP usually pays close to around 10%, I think it is at the moment. I'll tell you what BHP is at the moment. 1 second. Based on current numbers, it's running around 5.17 at this stage. BHP, yeah. Fortescue, as we sit, is running at around 8.13. Go that. So does that, for me right now, which stock would I be looking at more closely if I was looking at both? And this is why, before Blake said which one does influence me, is probably Fortescue will probably influence me more than obviously BHP. Does that make sense, guys? On a dividend return. Yeah. But it's not paying a dividend until August, September. So away we go. Yep. Well done, Steve. Excellent. Awesome.
Very good. I
Any
think we covered
questions?
a lot in there, Jimmy.
Yeah, we have a lot to digest. Probably, look, guys. What I'd probably suggest, guys. I know it's a lot to take in. For me, it seems because I've been doing it for years, it's easy, right? But when you first learn it as well, go look at the recording again and again and again. You know what I mean? It's a good sort of reflection on how to sort of do it and away we go. That's my trading strategy, guys. And obviously, at the end of the day, you got to develop what's comfortable for you. Okay, but that's what I look at as well, personally, as a trader.
Yeah, no, there's a lot of good information to take from how you go about things, Jimmy. And I guess that's part of the process of learning is
Yeah,
to, hear from people that do this day in and day out and,
yeah,
like get an understanding around how they do it. And maybe there's a few things today that Jimmy spoke about that you weren't aware of, or something that you can look further into and potentially add to your own trading plan. But it's, it sounds like, keeping the fundamentals really tight and understanding the wider macro market, and then, understanding the stocks that you are trading, and don't feel the need to trade everything in sight. Just, know what's going on within your own realm
yeah.
and try to take advantage of that too.
Awesome. Yep. Well done, Blake.
Yeah,
Well said.
absolutely. I think that probably covers us with good timing as well, Jimmy. So I'd
Yep.
be interested to know anyone's feedback around these type of sessions as well. Obviously, a little bit different to what we've done in the past, looking at a whole range of different stocks. I know there's a lot of interest around options, especially, and looking at the different strategies and the strikes and taking profits, and managing trades, which we probably didn't get into today, Jimmy, but maybe one for next time too. So,
Yep. No problem.
um, yeah, any feedback from anyone, that would be great. But I think I'll let you all go and enjoy your Friday afternoons and weekends. But, thanks so much again, Jimmy, for spending the time and jumping on today.
Awesome. No problem. Take care, guys. Happy trading. See yous.
All right. See you all. Bye.
Yeah. Bye.